Traders, what's happening? How's everyone doing? Jamie Setley here. This is a free webinar with SB Trade Desk. I have not done one of these in quite a while, but I don't know, it's a good time to do one. We are entering the fourth quarter here in just a couple days, right? Third quarter ends this week on Friday, and then we've got September. Well, not the fourth quarter, sorry, but the last trimester, I guess you'd call it, September, October, November, December. So, you know, roughly 2/3 of the way through the year. So it's a good time to kind of take stock of what's going on. And we're going into, you know, what summer gets over and you start to get maybe a little more activity, although, you know, we've had a lot to trade here lately for sure in FX. So I'm going to dive right into it. You guys can all hear me. I'm already hearing comments, seeing comments. You guys can hear and see everything fine, it seems. So let's just go. All right. Well, you'll notice if you're new to the analysis that we do, we as in myself and Mike Boutros, that we kind of focus on. Look, I look at a lot of things from technical traditional patterns to, you know, Elliott wave stuff, although I'm not like a pure Elliott wave guy. It's just kind of, for me, it's a tool. It's not the end all be all. Look at some momentum stuff. But really the heart and soul here is trying to identify the angle that a market's trading on. Okay, so it tells you a lot. If you can identify the channel that you're trading in, it tells you direction, right? The channel is sloping up, down, or sideways. It tells you where you're likely to see support within an uptrend and resistance within the uptrend, and likewise support or resistance in a downtrend and support within a downtrend, right? The angle of the slope or the channel also tells you how strong it is. I mean, if you're in a really, you know, strong upward sloping channel with a high angle, it's, you know, you're in a strong uptrend. If you're trading flat sideways, you're in a sideways trend, right? Trends go in three directions, up, down, and sideways. So let's start with US dollar. It always starts with me with US dollar. And I know that DXY is the, you know, the big one, the most popular one. I do prefer to look at, however, this index most of the time, and that is the US dollar, the Dow Jones FXCM dollar index. It is going to give you a little more, I think, color on general dollar direction, right? You've got DXY, which is 57% euro, okay? And you've got, I think, yen might be 13 and pound might be 11 or something like that. So those three currencies take up most of it. Where with this, it's the four heaviest or most heavily traded currencies against the dollar. So we're looking at euro, pound, Australian dollar, and Japanese yen. You know, to be sure, I talked about this morning with our members during our member webinar, and we've got what I would call kind of a fractured market, right? I mean, just look at today's trade. Pound exceptionally strong against the dollar, right? Euro more or less flat against the dollar. Yen extremely weak against the dollar, and the Australian dollar was also very weak. So, you know, by no means are we in a kind of one size fits all trend as far as the dollar is concerned. However, these things tend to work themselves out over time. This is a weekly chart, and you know, amazingly, we're still on a very long-term scale here. We're looking at this US dollar uptrend from 2011. Okay, the angles within this and the slope lines within it are extremely important, and you can see why. Here's the nomenclature that we like to use, or that I like to use here. So here's your channel, and if you're looking at just a channel like this, right, it doesn't matter if it's, you know, a so-called pitchfork, which is a type of channel, or just a regular channel like this, or a shift fork, which I'll get into a little bit later. But within it, you've got your center line of the channel, which would be, you know, also known as a median line, right? It's the center of the channel. And then you've got lines within the channel. The ones that I plot right away are going to be the 25 line and the 75 line. And that's pretty self-explanatory, right? It's 25% through the channel. So this would be 25, 50 middle, 75 here, and then 100 would be what we call the upper parallel, while 0 would be the lower parallel, or just the trend line. So in this case, look at US dollar. Do you see the 25 line here? Look how big that is. I can zoom in on this. We'll go to a 4-hour chart, in fact. Okay, let's go to a 4-hour chart and scroll back in time. And you can see just how big that is, right? So the dollar's obviously come off a good deal, since mid-August, August 15th. And we are getting pretty close to this level. So, we're nearing what I would consider kind of the first big test for this dollar drop, okay? We are right around the 4-hour 200 average. All right, we're just below it. But I would pay a lot of attention, to this level, which is about 12,100. That's going to be the high from last November. Okay, so kind of as we look at some dollar charts, it might be wise to kind of consider that we are getting pretty close to a test level. Now, to be sure, if we break down below this, I'd certainly consider it something bearish and would be looking lower. Raj, long time no see. How are you? Raj is asking, is this recorded? Yes, this will be recorded. So we will have it recorded for everyone to watch later on. Just real quick, by the way, guys, I'm just going to go through some stuff here, some of the bigger things that we're looking at, maybe some current setups, and then I can take some questions too. Okay. All right. So this little simple observation about the 25 line, which funny enough, we actually bottomed on about a year ago, right? Remember after Labor Day last year, we had a big kind of a low in September, and the dollar shot up quickly. That was also when the bonds rolled over real hard. You can see the resistance on this line, and look, sometimes you trade around and it's a bit of a mess, but you get the idea. It's an important spot. All right, so there we have our US dollar. Okay, now let's go to euro. Let's stick with our theme on kind of identifying the angles, right? So I don't like to look out too far ahead. I think when I've gotten into bad periods in my trading, that is what's happened, right? I've gotten into looking too far out and not kind of trading in the present and like what's there. So, with that said, I don't want to try to project which way the major dollar trend is or euro trend is at this point, because frankly, you can make a case for both. You do have a very long-term channel back to 2008, which really we're still within, okay, and we haven't broken out of that. At the same time, we've got some really long-term charts that suggest that we just really tested kind of the breakout level in euro, and that will actually be, I think I've got that over here, so just give me a moment here. Yeah, here you go. So here's a weekly chart. This is one that we were looking at just a couple weeks ago, and if you kind of connect the highs from 15 and 16, 2015 and 16, this really is nothing more than a retest of kind of the breakout, right? This would have been your first breakout attempt over here in June of last year, and finally it happened. And I'd say this is a pretty valid line. I mean, look what happened when you broke through it. It was a real surge to the upside, right? And then look what happened when we tested it, like to the tick. By the way, also had the 2016 US election spike there. By the way, also had the 200-week average. So I know some of you are here that are members, so this will obviously look all very familiar to you, and you can say how awesome it was in real time, of course, and all that good stuff. But what about now? So we are actually coming up on a very big level, all right? And I do like to do this, especially when I'm doing kind of a free webinar. really to show the process of this. So you don't need to get real complicated with like a bunch of indicators and stuff. I certainly do. I will admit I have the problem of probably drawing too many lines on my chart at times, but most of them are there for a purpose, or at least I tell myself that. So we're looking at this trend line, right? This is your angle of descent, okay, since the year started. This is your high for February 2016 or 17, excuse 18. Don't even know what year it is. And oh, hold on here. I have a question here from Tatenda. It says, what scale do you use? So I assume you're asking if it's log scale or arithmetic scale. The answer is both. It really depends. Okay. And I actually can, let me go through that, answer that question real quickly with something here. So this is a monthly chart of euro. Okay. Say I draw this trend line. Test, 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 test. Can you guys hear me? Back on? Okay. All right. Hopefully that's the extent of the issues. I've gone like, a month now without having any issues on the audio. So I hope that doesn't come back now at the worst possible time. Anyway, here is your trend line on log scale. Never got to the trend line. Here it is on arithmetic scale, and it hit it to the tick. So the answer is that there is no answer, right? You kind of have to look at both, all right? Okay, back to the present daily chart euro. One reason besides the sentiment and everything else that I just explained to you, or sentiment and all the other stuff that we use, that we were looking for a low down here at 113 was actually this. Boom. Okay, that's it. That's it, literally. Original slope, right off the low, nailed it, okay? Now, we're coming up on the next big level. Why? This. This is your original channel. This is your original lower channel line, and this is a setup that we look for quite often. You break below, you come back, you test it, hit it to the tick, down you go, okay? So that level is kind of right up here at 17, if you want to get real cute about it, it's 1766. You can see us taking us up here and people getting real jacked up about the euro, and then it fails just in time for that, for a pullback. And really, we haven't had much of a pullback since this run started. So I'd be looking at a pullback potential for euro, and, kind of, I guess by definition, probably dollar the other direction up here, right? That doesn't mean that I got orders to short here, because I do think that the trend kind of turned a bit. But look, we get up there and you get yourself a nice, daily reversal, or a 4-hour reversal even, or something like that. I think that there's enough evidence after this run to just look for a pullback, right? Nothing spectacular, nothing crazy, although we don't know. But enough to get a good reward to risk scalp on the downside for a day, a couple days, what have you. All right, so there we have with euro. Okay, that is where my focus is on euro on the daily chart. Now we can look at a short-term chart, which everyone loves to do from time to time, and notice the method we're using here, which is the same. We're trying to identify the angle of the uptrend on the short-term chart, right? This seemed to make sense at the time. Why? Well, because this is just a little too steep, right? If we draw something like this, you got to use common sense too. Draw something like this, it probably is not going to be, you're not going to go up like that forever. So we've been using this one, and we've had kind of the same logic is applies here, right? So like this is your original channel. You can see break up to the top side, come back, hit it higher. You know, a little screwing around down here. Guess what? Hit it again, higher. Hit it again today, higher. And this red line, by the way, is that level we just talked about, which extends off of here. Same level I just talked about, but on the hourly chart. And you can kind of, you know, combine the two really to say, well, we have downtrend resistance here and short-term uptrend resistance like right there, right? So this area, we get a good shot higher here today, here on Thursday. I'd be looking for something to happen up in the 1780 region, okay? So there's a pretty good example of looking at Euro on multiple time frames just with your trend lines or your slope lines, as I like to call them, okay? You get a lot of good reward to risk opportunities with just this simple method. Now, to be sure, it helps a lot, you know, to have access to, you know, pay attention, have access to other data, have access to sentiment data. You know, if you're coming into a big slope area, and you've got not just the lines we talked about, like the slope lines, but you also have, you know, a big high, like we knew we had the November 2016 spike high, and you get a big volume washout, and you know your sentiment DSI is like at 6, and you know yada yada yada. You've got a pretty good idea that you know you're going to go the other way, right? At least for a little bit. Okay. So I'll leave that with Euro, and we're going to move on real quick to actually a trade that I really like here, and that is going to be on the Swiss franc. So Joseph has a question here, and whoa, it's a whenever convenient. I will, you know what, Joseph? I will check this out. Yeah, Joseph talking about the, I will get to that in a second. Thank you for your question. It's a good question. All right. This is the Swiss franc, dollar Swiss. We've hit a big spot here, and I'm going to present, this is another setup that's specific to channel analysis, median analysis, whatever it is you'd like to call it. So we've got the 200-day average, 97.40 something, and you've also got this is now a regular fork. Okay, this is a bearish pitchfork. The rules within it are just like any other rules as far as trading around horizontal levels, you know, breakdown levels. You know, when I talked with members this morning, we were talking about, you know, a lot of times you get into a trending move, right? Like get into a nice down move like this, and you kind of, it's kind of tough to get into the move, right? You kind of get into this runaway move, and you don't want to enter here because you're like, you know, like we had an order to short dollar Swiss up here last week, literally right on this neckline, head and shoulders neckline. It wasn't triggered. It missed by like literally, I don't know, 7 pips. Okay, it happens. No big deal, right? I'm not worried about that because I know I'll get an opportunity with my methods to try it again. Well, what happened? Today is important because today we sliced right through, accelerated right through the median line. That's a biggie for me, okay? Because then I can use that median line to put an order to short on the other side or on the underside of it. So in this case, you're basically trying to short back at the median line, which is also 200-day average, which by the way is the yearly open, okay? You can stop yourself out above the daily high from today. You know, let's go to intraday chart. You get the idea, right? This is actually, there's a name for this. I don't know where I actually came across this, but I've heard people talk about it, and I have some friends that utilize these methods over the years, and called the zoom and retest. So you zoom below the median line, you come back, you retest it, and then you continue on the direction lower. All right, this is a great example of how to get a good trade setup with solid reward to risk and, you know, a decent probability, right? I mean, people talk about reward to risk setups. You can have reward to risk setups all day long. Doesn't matter if none of them win. So, you know, this is a very well-defined setup and something I'd be looking at trading really well today. We've got, you know, some orders in for this. So there's a good example of a setup in dollar Swiss, which frankly has been kind of a pain in the ass for a while. Not much trade with dollar Swiss, but I've got a good setup here going into Thursday. All right. Now, again, I said that I don't like to look real long term because you can kind of get caught up in, you know, these fantasies. I will throw up a, I think it's right here. This is a weekly chart, and we are pressing into the 200-week average, right? Kind of after a false breakdown. So you could have, you know, if you start to gain some ground on the downside, it could be decent, but there's just as good of an argument to say that you've got an impulse up and that you're going to trade lower in an ABC pattern down to 95.20s. Either way, trade in the present trade is to sell strength, take it down to this area. All right. Let's go to cable. So cable, there's a long-term chart. Okay, so we have a fork here that we're looking at. Okay, and this guy, all we did here was look at the August low. Right, price took out the August low in August, and we've reversed higher. Wouldn't be surprised to see a pullback here. That's the low from last October and November. By the way, this is the same stuff I'm going through with you guys that I went through with our members this morning, right? Of course, I do it with them every single Wednesday, and you know they have the updates and the trades every day as well. So, not giving away anything here, as far as I'm concerned. But you know, pullback here, but like, don't you like this look, right? Don't you like this look? And we want to trade with the short-term trend into a level. And to me, the first real level based on the slope is probably going to be the median line up here. And that's going to be up around 31.25, 31.30, which, oh, by the way, is where we open the month of August. Okay, so it's a good spot. And here's a short-term picture. That's it. We are just looking at this trend line. We are projecting up to here. We are looking at internals to see where it would be advantageous to buy a dip, right? Now, again, that does not mean we're going to get the dip. It does mean that if we get it, we know exactly where we're buying it because, you know, if the lines hold up and the interpretation is correct, you can really get a, you know, a market to go in your direction right away. You get a high reward to risk opportunity. With this method, and I've noticed this with my trading for some time, you know, my money seems to be made kind of on the entry. You know, I'm bad at, I need to work on it, at letting the trade kind of go, like letting it really run. You know what I mean? That's never been a strong suit for me. So, you know, there's always something to work on in this business. And that for me is certainly probably one of the biggest things, is letting it just go, right? You get into a move, go and raise your stops. But in terms of entry, that's kind of the strong suit, right? As far as this method's concerned and my application of it. So in terms of cable, what we're looking at here is, again, we've got the 30-30, 30-40 area. By the way, 50-day average is up there too. And any weakness into this, you know, you'd be looking for support probably around the 29, you know, 60, something like that, right? Looking on these parallels here, you can see all the pivots that you do cross here on cable over the last couple of weeks. So That to me is kind of the sweet spot in terms of getting in and then targeting it somewhere up here. Now, I would say, I guess, this could be one of those times when you might want to let it go a little bit, right? Because this could be a 1-2 and then 1-2, and then you're kind of in your 3 of 3 in Elliott, right? So this could be a time when you don't want to necessarily, be quick to take your profit at a level, okay? And maybe let it go. Maybe trade a couple different parts, right? Take half up at a level, let it go. Right, all this stuff is going to be very personal for everyone and how they like to trade, but just pointing out the levels is one thing, but understand the context, right, and that we're in maybe a third of a third type of wave, which, in Elliott is typically the strongest phase of a market move. That's when you really want to let it go, right? Okay. Trading Aussie and Kiwi of late has been pretty good for us. They've been just kind of choppy, but we have had some good trades here, just some clean levels. I mean, been trading off of 73.60 lately. Literally was able to get out right on this low today. There's things I think, and then things that I, want to, things I think, and then things that like are trade setups. So I think that the dollar's trying to roll over and break a big level, right? It tells me that Aussie should probably get up and out of here at some point. But I also know that the Aussie's been trading like hell against other currencies for the most part. Okay. I also know that you could have the kind of early stages of an uptrend here, given that, let's see if we can take a bigger picture look here, actually, because that's not going to make any sense if I don't show it to you. All right. All right, so here you go. Again, trend line back to 2011, okay? This lower parallel, which was really big support back in 2013, 14, then the next level really, it's kind of right here, okay? Well, look where we've bounced off of, right? We've been trading between these two. So your big spot to get over really is, this line 73.70. You can call it the high of 73.80. This to me would be a pretty big deal if you got over 73.80. I would expect acceleration to the upside. So, trying to get ahead of that, can be kind of a dangerous thing, of course, but not if, you're applying the method right. So in this case, we could have seen a low today for all I know. Okay. Supports here off of, we're looking at, this is, by the way, a February trend line, February, March. You can see how beautiful that channel is. And what we're looking at here is trying to trade on those parallels. So this is your center line, but this is probably the bigger level because you continue to hit it. I would love to get a confluence of trend lines. So like if we can kind of screw around for a little bit, and maybe even dump back into the 72.70s, maybe early next week or something, then I'd probably be looking to buy Aussie at that point. Of course, the other option, as mentioned, is if you get back up over 73.80, then you will have gone back through this long-term slope line, and you would have reason enough to kind of be constructive with that line itself as support, especially because it was just resistance. Okay, so there we have the Australian dollar. All right, New Zealand dollar, as members know, and I know there's some in here, this is one that we've liked a little bit more so than the Aussie on the long side. Kind of been trading Kiwi on the long side and Aussie on the short side. And the reason for that, one is Aussie Kiwi, which went and hit a big resistance line a couple of weeks ago and has since just absolutely fallen apart. Although Aussie Kiwi is nearing support from its 200-day average, so I would be aware of that too. That might actually be kind of a trigger for a long Aussie against the U.S. dollar itself. And we are looking at a channel here. The right channel to look at. You know, a lot of people too will say you can't look at this is not valid because you traded through it. Well, I just don't agree with that because one, this has given us a bunch of really good trades. Okay, this channel here, I mean, nailing low in May, in July, and again in August. And now we're looking up toward this February-March line with the break above, potentially ushering in a really big move. We are long Kiwi right now, have been long Kiwi. And frankly, if we can get up through, this is your channel from the lows. If we can get up through this area, okay, which is the center line here, you can get up through here, call it 67.30. You can get up through 67.30, then I would be looking at adding to this because again, on the longer term chart, it is quite possible see here that we have actually put in a pretty big low. I'm not going to draw the labels on here, but here's like an Elliott, you know, longer term Elliott look, right? You got a 1, 2, 3, 4, 5, A, B, C. C is clearly in 5 waves. Okay, you've got a good pivot here. This is a parallel that goes back to well, this is your fork all the way back here to 2011, and just look at all the highs and support on there. Okay, so if you get back above there, it's a lot like the Australian dollar. You get back above there, you'd have what I call a behavior change. Okay, the market has changed its behavior if you get back through that area, which is essentially the 67, 60, 70 area, pretty close to the low, by the way, from 2017. So that would be viewed as a big positive if that were to happen. Okay, so near term, certainly looking at something like 67.90, 68, but bigger picture, you got to recognize the potential for something big to happen. Okay. And now that you can count that 5 up and 3 down, there's a real possibility there. All right. Okay, let's continue on. We'll look at the Canadian dollar. Before I, hold on here. Before I continue, this is, by the way, if you are finding this of any use and you think it could be of use in your trading, this is a discount code to subscribe. So I'm going to get that out there for you too. Let's look at the Canadian dollar. This is one of the very interesting ones to me right now because this is another example. I believe it was Tatenda that asked this about which scale to use, right? So we're talking about, looking at, you're looking at log scale, you're looking at arithmetic scale. Well, log scale here has been an absolute dream. So, or not log scale, arithmetic scale. If I look at log scale, you get this, okay? Not as good. So 2012, 13, 14, okay, that channel, lots of huge moves off of that channel. I'm going to scroll in. By the way, you can see we're at the 200-week average. Now we're on a daily chart. Look at all the big moves off of this channel, line, excuse me. Look at there. This was back in May. So go even shorter term. Let's go 4 hour. So 4-hour chart is in a downtrend. I like to do that. I like to trade with this trend on the 4-hour chart, okay? We've got the 4-hour chart. Let's go to the April trend line here too, all right? So April trend line, April and there you go, August, okay. It's actually better to look at the February, April trend line because sorry, Claire, for getting my trend lines drawn perfectly. Here we go. All right. So you've got a lot going on here. You're kind of in jail. Like the Canadian dollar is kind of in jail. So you've got the top side of the 2016, 2017 line, okay, which is going to be, you can see here in blue, right? Again, that's this line right here. Ding, ding, ding. Okay, we've got the 2012 trend line, which we just talked about, which is in magenta. And those are kind of like here and there, right? And then at the same time, you've broken this uptrend and you're on a 4-hour downtrend. So, you know what to do with this. To me, it's really important to just trade around the edges. I mean, that's what I try to do anyway. But like we've been leaving kind of orders to short, like up around 130, 130.20. You do have, I think it's GDP tomorrow in Canada. I'm not like a fundamental trader by any means, but I do know when all of the events are market moving events because I want to be aware of volatility. And frankly, like a lot of times fading a news release, a lot of times is what gets you a good entry. So, you know, if we're down here and we're, you know, trading around the support level and you get, you know, GDP comes out and whatever it is, we've seen, you know, markets rip on bad numbers and tank on good numbers, and you know it's all in the reaction, right? So whatever it is, I don't care about the number, but if we do get a rip, then I'll be looking to fade it, right? I'll be looking to fade it anywhere probably between 129.90 and 130.20, right? This area right here, that's my zone, okay? You know, at the same time, if we come down here on the news and we make a little capitulation low and then we reverse up higher, right? I might be actually willing to think, despite my so-called dollar, you know, looking lower bias, don't forget, remember US dollar, the index, I know CAD's not in it, but don't forget we're getting close to a big level anyway. So I might be willing to actually take, you know, take a long off that, right? It's all about having context. In this case, context is that we're trading between two big spots, okay? All right, so there's CAD. You know, nothing super, you know, clean right here, like I'm dying to buy it or sell it or anything like that. I'm kind of willing to go either way. It depends, you know, how the markets act around these levels. All right, we can look at, I do want to share a gold chart. I think it's one of the more interesting charts right now. So again, this is going to look like a real mess because, so here, what I'm going to do is I'm going to go over here to a chart that's got nothing on it. All right, hold on. Okay. All right, here. Let's go to monthly chart. Monthly chart, and yes, we are looking at linear, okay? (2008), 2001. Now that's fine and dandy, but here's what's really cool. Look what happens when I stretch out that chart to the left, or that line, excuse me, extend that line out to the left. This is something I like to do because it tells you if the market's been trading, you know, on this for longer than, you know, like I drew the line from here to here, I get it, but then I want to see if there's any validity to it. And like this gives me, tells me or suggests to me that there is some validity here, right? Like look at the high here in 2003. Look at all the support around it in 2006, okay? And now we can zoom into this. Let's go to a 4-hour chart. Okay. Okay, here's the 4-hour chart. Pretty big, right? Gold's really testing a big spot here. So now I can take you to my chart that's got all kinds of crap all over it. All right, let's go here. I'm actually going to look at the CFD. I think I've got the stuff kind of really drawn there. All right, here we go. So on the CFD, which is going to be a little different in terms of prices, but the shape and everything's the same. So we've got a couple things here. Bear with me. I know there's a lot going on in this chart. Apologize in advance, but I kind of know what they all are, so it's okay. So you do have a fork, which has these blue lines on it, which is from all the way back in April, okay? You see this blue line, how that was resistance here and resistance really recently, like back on August 10th and resistance on August 22nd. If we were to drop back there, okay, if we were, excuse me, get back to that level, you'd be looking for it to provide support. Now, hopefully that doesn't happen. I'd like to see us get up and out of here, and we are trying to press through this upper parallel as I'm like talking right now. But then the next big level you're looking at is just the trend line from April and June, and that's going to be up here at 1240 or so. And again, that's a CFD level, so the gold futures front month is going to be a little bit of a different price as they are when they first roll over, okay? But bottom line is what we did here with this longer term chart is we've hit a really big spot, okay? And we may be, you know, we might be bouncing around it for a while. There's nothing to say that you have to go straight up from here, although given recent sentiment in gold, I wouldn't be all that surprised. But like, for example, let's go back to the action on this back in 2006, right? Look what happened. Boom, boom, hit it again, ripped, came back to it, hit it again, came back to it, traded below it, came back to it, right? I mean, you get the idea. This could be something that's in play, you know, for weeks or even longer, okay? But the thing here that's so helpful is that it's really, it's a great reference point, okay? It's a great reference point to understand, you know, a long-term bull bear dividing line in the gold chart. And you don't have to be right. Like, you don't have to, like, you know, say that gold's going to like 1500 or something, or gold's going to 800, or, you know, you don't have to have these grand crazy things. Like, it's okay to like buy support and then, you know, take a chunk and get out, right? And do it over and over again. That's perfectly acceptable. For someone that's trying to trade and make money and live, okay? Silver is going to be quite similar. I'll go long term here, weekly chart. We're looking at a 1971 to 2001 trend line, and those parallels off of that. Focus your attention on the magenta one, okay? I'm gonna go daily now. Let's just look at the action to give you an idea of, like, you know, back, say, in 2006, you know, traded around it, it was resistance, went through it, came back, it was support. 2008. Look at all the trading around it, and finally it took off to the upside, okay? Look at, actually didn't quite hit it in 2015, but right now, look what happened. We hit it 2 days ago, and we came off. So again, given other methods of analysis, sentiment, et cetera, et cetera. Pay attention to this line. Like, I don't have any interest in silver until we are back above it, and preferably testing it from above as support. Okay? All right. So that is the stuff that I really wanted to get through. So I've got a question here from Joseph. He is asking, I read your book, Sentiment in the Forex Market. Awesome. Thank you for that. I hope you enjoyed it. And I did. I provide a long-term Elliott wave analysis at the end. That's right. So it was a long-term analysis on the yen. That's right. So this was back in 2008 when I wrote it. So yeah, Joseph, I know what you're talking about. We had, so the one back then, and I don't have those labels on here, but the one back then was like an A, B, and then, or sorry, A, B. We had 1, 2, 3, and then this was all triangle 4, and the book, which was written right about over here, called for a drop down. I actually think I had a target. I said it was going to drop below the 2001 low, and then it was going to reverse and have the biggest rally that it's seen in a long time, right? So that did happen, and we actually hit the channel up here. So let me zoom in now. We're on a monthly. Let's go weekly. So this is where I'm at now. To me, so you've got 5 up, okay, from back in October 2011. This is probably an A. It's looking more and more like this is all a B wave to me, rather than this being the full correction, right? Again, this is more academic than anything. Like, I'm not going to trade on this. This is what I said earlier. Like, you don't want to get too far grand and try to be predicting what's going to happen. It just doesn't work. But in terms of dollar yen, like, the trading might be quite difficult for a while because we could be in a B wave, and B waves are like the worst ones because they have so many options, right? Whereas impulses are pretty cut and clear, like you're going in one direction and trending in that direction. So with dollar yen, this could all be a B wave, right? We could be A, B, C. We could be in a triangle for a long time, and then have a dump down in C or something like that, right? You could even have some crazy flat and then go lower. So if I'm looking at dollar yen from a maybe a shorter term perspective here, something to pay attention to is a channel. We've got a channel. Hold on, let me bring that in. So we've got a channel over here. This is the weekly chart. Let me go to different feed. All right. All right, so what we were looking at here is this. Hold on. All right. Here's the channel that I am currently looking at and trading. This is it. So again, the closer we get up to resistance, the more I'm kind of like wanting to be maybe shorting that resistance. Pattern-wise, it's kind of a lot to be desired here, but this could be one of the rare leading diagonals, right? You got a 1, 2, 3, 4, 5, and you're getting a big kind of ABC on the upside, in which case probably going to see resistance around the 1240s. It's been my experience that in leading diagonals, you retrace more than 61.8. A lot of times you'll go 786, which is going to be 1245. Okay. Now we could take this even a step further. Maybe try to trade up to that level. So you see this line here, okay? Crossing all these supports. I'd be looking maybe support a little lower, like 1150 and change. Okay, you go tight stop on that and try to take it up to 1240 at some point, maybe even tomorrow or Friday, and into a top. So that's a good example of looking at the longer term picture and saying, well, this is a possibility and it's fun to talk about, but you know what? We're going to try to identify where the trade is here in the near term. Okay, oil. Michael Williams asked about oil. Sifa asking about pound Aussie. Well, I will certainly take a look at oil here. I can do my best on a pound Aussie chart, although I'll tell you that I tend to stick to, for the most part, I do tend to stick to dollar crosses. Every once in a while, we'll do a yen cross. I've just found it so much easier to manage risk trading dollar crosses. Like we've had times this week when we've been long Kiwi, at the same time we've been short Aussie and long Euro, right? Maybe trying to get long pound, you know, you get the idea. So at times we might find ourselves long pound Aussie or short pound Aussie through the two legs, right? It's easier that way. You don't confuse yourself, I don't think, by looking at all these different crosses. But I will take a look. We'll do our best. Okay, let's go to crude chart. I've actually got a crude chart right here. So here's an hourly crude chart. Elliott wave wise, it does look like we've got 5 up, doesn't it? Like 1, 2, 3, 4, 5. Although on a levels basis, I probably wouldn't be trying to fade anything until 70.40. At the same time, you got 5 up after you got, you know, kind of a choppy drop here. Tough to count this, in my opinion. Like this could be, you can't count 5 down. It's, put it this way. This is, so with me and Elliott, I don't like to like have an Elliott wave interpretation, right? Unless it just jumps out at the screen and says, hey, moron, this is 5 waves or this is 3 waves, right? Like this is 5 waves up. I don't know what this is. This might be 5 waves down. This might be 3 waves down. This might be some other wave down. I don't know what it is. Yeah, Pete. Yeah, Pete, you've seen it. You've seen it, my man. How things have been going. You've seen it. So yeah, I'd be looking to fade 70.40. Okay, 5 up here. You know, probably do a little bit of Elliott measuring. Oh, look at that. I love it. So wave 5 equals wave 1 is 70.40. Boom. All right, so 70.40. I'd be looking to fade 70.40. Okay, and if we did fade 70.40, you're probably going to get support on this line down here. Okay, that line has been a pretty good pivot. Again, this is all based, this is what we talked about earlier. This is all based just on the original slope that we're looking at here. Okay, so next move for me trading crude is probably shorting up here. At the same time, you'd probably look for a low down here somewhere. But again, we're getting a bit too cute in terms of talking about that 2 moves ahead. It's fine to think ahead, but take care of move one before move two. Now, there's a very interesting long-term chart for crude. This is a weekly chart of crude, and we're going way back to like the 80s. And you see this, the area that we're in right now is pretty darn important. So, you could be consolidating up here for a little bit, which, I wouldn't be all that surprised if that happens. I mean, had a hell of a move off the 200-day, right? Maybe looking up here, maybe come down, maybe go for another run, but just don't forget, longer term basis, longer term context, we have run into a pretty big spot. Like, you've got the low here from 2011, which was like right on the high from July. You've got parallel here, right, based on trend line from the 2008 high. Okay, so there's a lot in terms of resistance on a longer term basis that you kind of got to get through. And, it's kind of also the type of market that makes for fake outs, like, when you're up at these levels. Either way, 70.40 is level for us. Okay. Pound Aussie, we had a question on, and then I had a question on dollar rand, which totally want to take a look at that. Pound Aussie. All right. Going to look mostly like pound here, isn't it? Because Aussie's pretty quiet at the moment. So the first thing I do when I'm looking at a chart is I will go and I will just look at the original trend line, right? So in this case, you're looking right there. Or maybe is it there? Let's see what that looks like. Okay. So probably not a lot to do here because you're already well off of, let's see, this might be better. I actually think this is better. So if I'm looking at pound Aussie, I'm aware of this level right here, right? 78.80 for maybe a pause, maybe a pullback. But why don't we see if we can find a shorter term angle to trade on, because clearly we've broken to the upside. We've got a nice series of higher highs and lows on this. I tell you what, I'd be looking at maybe some resistance right here, 78.70. Beyond that, this, again, I'm just giving my interpretation on this, okay? Like, this is not something that I'm gonna be looking to trade myself. I am looking to trade pound dollar. I am looking to trade Aussie dollar. But let me just give you kind of what I would look at here. So that area is one that I'd look at for resistance, okay? If, however, the market went through this level, you'd be looking at, especially if you had something like this, especially if you went up here first and then pulled off a little bit and then you went through, then you'd be looking at this level for support, okay? So 78.80, maybe a pause, but if you get through it, you actually be looking at this line to provide support on the way, to higher levels, okay? And your next level on the upside is going to be 83.30. You can see that resistance over here, right? Okay. let's take a look at, Pete was asking about euro yen and pound yen. And yeah, it's been, took a little loss on a pound yen trade today. And it was a little loss. It was, thank God. That would have been brutal. So, okay. So, Pete, you already know where I'm going. Really, like 146. I mean, it's like in 35 pips would kind of be an area. You know, I mean, like look at the, so that's the 25 line in the channel. And I know we've looked at this a lot, not a lot, but I had this chart up a while ago in one of the updates. There's a lot around there. I mean, there's just there's a lot. So, yeah. How do you get a pullback from that area? Okay. Now, to be sure, the momentum on this is just wild. Like, you know, I'm not sure. I don't know. I'd probably be looking at, we talked about the short that we had. So for those that are like not members here, we actually had a short right here at 143.40 and it was stopped out at 143.70. And that's a good thing because now it's 200 pips higher. I'd be looking at, yep. So I'd be looking at this, okay? Probably go a little higher, right? Something like that. So that, you know, this is an hourly chart. So, you know, as you move forward in time, it's going to be higher. But if you can get a pullback here from say 145.90, 146, you know, in time after a period of consolidation, you know, that's really not that low. It's not that much of a pullback. I'm not saying it's going here tonight, right? I'm saying that moving forward in time, this upper parallel line is the one that you'd be looking at for support. You know, whether it's, you know, early next week or late next week or 2 weeks, you know, whatever. So those are the two levels for pound yen. Okay, I am running out of time here. So I do want to take, I do have Roxy asking a question about the US indices. So I wanted to take a look at the S&P 500. Because I'm sure that would be interesting to people, maybe. All right. Oh, not there, not there, over here. All right, S&P. So we have a shift fork that we are working with from the 2009 low, okay? Connect the low, high, low, you need 3 points to draw a fork. And essentially what we're doing here too is we're taking a fib measurement of the entire drop from 2007 to 2009, okay? Now the first measurement for that was actually the 1618, which was 2138, and I'd say that was pretty good in terms of identifying resistance, right? 2015. The next one is actually going to be 3047. So this, by the way, the red parallel up top, you can see crosses the highs throughout 14 and 15 and this year, although we did go above it and then we gap below it. And then we had that 10% down real fast, right? Now we're back. We put in a lot of ink here, okay? So don't think this is gonna stop like, you know, right away. that doesn't mean you can't have whipsaws or pullbacks or fake out, little short-term fake outs or whatever, okay? What I'm saying is the big level up here is probably 30.47 at some point. If we want to kind of get nitty gritty and go short term on this, you know, 28.47 be kind of too much of it'd be a hell of a drop. I honestly, at this point, I'd look at the high from Jan, 28.70. You know, you can get back into there. You might have yeah, get a gap fill. Maybe that's the spot, right? But as it stands right now, like, kind of tough to be shorting this. Look, I could make an argument that oops, hold on. That you do have a level in a bit. Hold on, let me. All right, what is that? Let's see. So the parallel off these highs is going to be about 29.35. That would be an area for if you had some real cojones to short into that, maybe. Okay, for a drop. But really, in terms of getting like something really important on the upside, I'm not sure that I'd really try or think about that until that 2618 level, which, again, 1618 was great. So that's where I'd be thinking. Okay, got to wrap it up. I will archive this and we'll send it out, to people and emails and Twitters and whatnot. I hope you enjoyed it. Again, if you are new to this, me or this type of analysis or whatever, let me show you a little bit about it. I write every day. Mike writes every day, swing updates. We've got more about this, about what the scans mean and are, but then you can see we've got active trades and pending trades and watch list, and then all of our good charts, right? Charts like ones I showed you today. Some dollar Swiss, some Kiwi, it depends on the day, but like today's pretty short update for me because frankly, I didn't have a ton to write about. Like the day before, you had a lot more to talk about. So, day before we had Aussie, Euro, Pound Yen, S&P, Dollar CAD, US Dollar Index. You get the idea. So it's, trades, analysis, webinars, and, come join us. So I gave you the link here. This is the membership discount link. Come trade with us. Come learn kind of some new things, some interesting things, some useful things. And I hope to see you around the SB Trade Desk webinars, member webinars, and on the updates. All right, Jamie Setley are signing off for SB Trade Desk, and take care, everybody. Have a great rest of your week, and good luck.